Attachment leads to jealousy. The shadow of greed, that is.
What must I do, Master Yoda?
Train yourself to let go of everything you fear to lose.
What's up, everyone? Welcome back to NYU Grads Daily Podcast. It is Friday, October 27th. I'm recording this after market close. Just wanted to let you guys know that I'm dedicating, as you can hear in the prologue, I am dedicating this episode to the wise Yoda. I want to actually quote something that was cut from the movies. It was cut from a script from Revenge of the Sith. He says, "In a dark place we find ourselves, and a little more knowledge lights our way." And I think this is a perfect tee up to Friday's session. And I'm going to cover a lot of things today. Hopefully I won't go on too many different tangents because, as you know, I like to keep it really tight and focused. This is my 79th podcast episode. It all basically started from July 4th weekend when I said to myself, no more delay. There is no try, as Yoda says. There's only do or do not. And I embarked on this journey with the true intent of, and I don't think I've ever covered this, but I'm going to get a little personal, which I typically don't do on these podcasts. I'm over the age of 40, and I've learned a lot. I've learned a lot from my own mistakes, from my mentors like Bill Cara, my colleagues and friends in the finance industry, but mostly from my own learnings, whether it be my own mistakes that I've learned from or my own research in different styles of trading and investing that match up to my own strengths and weaknesses, right? Because there are many ways to make or lose money on Wall Street. Just the same way as if you've ever gambled at a casino or on sports betting, because this is all speculative, okay? This is all speculation. This is not a consistent income type job. And that's why it's so hard. And that's why over the course of time, it's very difficult to win against the house. Because just as casino games are mathematically stacked up for you to lose in the long term and for the house to win, I would say it's even drastically more weighed to the house for Wall Street. So with that said, I feel like I've learned a lot, and I want to I wanted to have an outlet, not just in written word, but also in spoken word, and soon to be webcast and video, a medium where I can share this knowledge in a concise way over time, because it's very hard to learn what I've learned in a bottle, and it's even harder to teach it in a truncated bottle. So I always get kind of skeezed out when I see YouTube videos where, subscribe, sign up to my newsletter. Hey, I have this course, 3-step course, how to be a great day trader. Like, it really irks me because there's just no way that someone can learn to do this in a week, in a month, in a year. So knowing this, I thought Substack was a great medium for me to primarily start sharing this knowledge over time, cataloging it, not only for myself. I don't have kids yet, but if I am blessed with that, if my wife and I are blessed with that, I wanted to have a place where these lessons can live on beyond my own life, so that in the future, if we have kids and they grow up, they can learn from these podcasts and Substack lessons. So thank you for supporting this journey for me. It's been quite a ride. Doing the work doesn't feel like work to me. Like, there have been times when I've been sick or I've been away and I still want to produce content. I think the only time I've said, hey, no podcast today, was when literally there was nothing to say, right? Like, I felt like, hey, it was really nothing to glean from that day's session, and I didn't want to waste the audience's time. So I'm committed to this, and the reason why I'm sharing this is before we jump into today's market, I wanted to... I've been kind of hinting that there will be a premium offering, and when we get to maybe 3,000 to 4,000 total subscribers, I will release it. We're right now at 1,300 subscribers, and I feel blessed because I've only been doing this since the July 4th holiday of this year. I've already been featured on Substack twice, and it's a blessing to be able to do this. My main vehicle of income and wealth generation is trading, but this is kind of the side hustle on the side as a passion project. And it's really a pleasure for me to do. I hope you can tell from the output of the work. But I did want to give you a preview. I didn't want to all of a sudden say, hey, I'm kind of going behind the paywall. Thanks, but see you later if you're not going to subscribe to the premium. So what I'm doing today, starting today, to Cyber Monday, which is November 27th, I still don't know when I'm going to do the premium paywall. But from now till Cyber Monday, if you subscribe for free and then you pledge for the future, once the future paywall comes out, I will be allocating a 33% discount to those subscribers once the paywall is announced and released. The steps are pretty easy to do. If you don't subscribe to the Substack, you just hit subscribe, give the Substack box the email address, and then once you're a subscriber and you come back to the Substack, on my Substack, you'll see the subscribe now button change. It'll show pledge your support in green. And once you see that, you hit pledge your support, and then you're brought to a page where you can pledge and support the writing with the future subscription. So the yearly is $180 per year, monthly is $18 per month, and the founding members, if you want to kind of donate a little bit extra for the work that I do, is $250 per year. So whichever of those three you choose to pledge, I will notate your account to have a 33% discount eventually once the paywall goes up. Really simple to do. It's basically a 33% discount for supporting my work, my writing, and the podcast. So I just wanted to let you guys know. I will post the details of this promotion on each podcast show notes. So if you didn't write down these steps, it'll be written as clear as day on the show notes in the podcast. So just a heads up, I want to thank everyone that has already pledged and subscribed, and I want to thank you in advance for doing so. Again, it costs nothing to pledge right now. You're just saying, hey, I value this Substack and this podcast. When the paywall goes up, I will pledge to be a subscriber in the future at $180 per year or $18 per month. It's a little cheaper if you do the annual, so you're getting an additional discount. So thank you in advance. With that said, let's jump in there is a great disturbance in the force. If you've been following my Substack, this should be no surprise to you. The Dow tanked today, yet the NASDAQ was up. And I'll go through this. And again, if you're a subscriber, you can probably finish my sentence as to why. Today, on Friday, October 27th, we had 44 new highs. We had 1,255 new lows. That's across NYSE, the Amex, and NASDAQ, all three. But, and I've yet to do this for you guys, if you peel the hood even further and just look at NASDAQ, we had 8 new highs and 413 new lows. How is this possible if you are a first-time listener that the Dow can be down 366 points and the NASDAQ be up 47? Answer is very clear. It's the Magnificent Seven. It's just a few of the names holding up the world. And I'll go through the numbers. So today you had Amazon off of their earnings yesterday, up 6.83%. Keep in mind this is well off the highs of what Amazon was doing intraday, but they're still up 6.8%. Meta up 2.9%. Apple up 0.8%. Microsoft up 0.59%. You had other ancillary names that are not Magnificent Seven, quote unquote, but you had Intel up 9.29% off their earnings. AMD up 2.95% off of sentiment of the Intel earnings. That's how. These names are holding up the entire market. And keep in mind, Microsoft not only is part of the S&P 500, not only part of the NASDAQ, but Microsoft is also part of the Dow 30. So this is how they're doing it, okay? But underneath, you have deterioration everywhere. When I take a look at the sectors for the day, you only had you had 3 green sectors: consumer cyclical, tech, again this is because of Microsoft, and Intel. Basic materials was up 0.22%. Everything else was red. Leading to the downside, you had healthcare down 2%, utilities down 1.8%, financial down 1.6%. If you take a look at the weekly performance, communication services down 6.59%, energy down 4%, healthcare down 4%, industrials down 2.5%, technology down 2.15%, financial down 2%, real estate down 1.65%. This is really bad. And I was on Substack notes saying, hey, if some of these Wall Street firms like Citadel, BlackRock, Goldman, JP Morgan, if they don't flip the switch for their algo HFTs from sell to buy before the close, and we close near the lows, my warning is that Monday or someday next week, they're going to need circuit breakers for the sell-off. So, with that said, just kind of going over my notes here, what really stuck out? There was no quit in selling all day. There were a few bounce attempts, but they were pounded. No hope in sight. The breath was not picking up to the upside. It stayed consistently pressured to the sellers. It's Friday. VIX Crush Friday was a real thing. Every Friday, the VIX will get crushed. Not today. The 10-year yield was closed unchanged. It spiked a little, but then it came down a bit. And I was still watching yields in real time, saying, oh, yields are coming down. Maybe because we're so oversold, Wall Street would step in to defend. No, didn't happen. What was strong? Gold was strong, but the gold miners are not reacting well. Volatility was obviously pretty strong today. What was weak? I'm not going to go through that list. It was a horror show. What to watch? I'll be honest with you. Earnings are coming out next week. Apple is next week. But next week, the only real two things you need to watch for is the Apple earnings. And Wednesday, you have the Fed decision for rate hikes or no hike. And their plan or their dot plot for the rest of the moving guidance. That's on Wednesday. That's all that really matters, to be quite honest. And then also the geopolitical conflict going on in the Middle East as that expands, and the Israeli troops have already went in on the ground. I think over the weekend you're going to see a lot of news on that. Those are really the things to watch. Do I really care about any of the other earnings releases next week other than Apple? No, not really. That's really the only one that I'm really looking for. And then on Wednesday, you have the the federal rate decision and forward guidance. Did I have any other notes here? No, this is really it. And again, looking at the timestamp of this episode, we're at 16 minutes. There was probably about 10 minutes of me doing that intro and letting you know the promotion. I really keep this tight. I want to give you guys what really matters, because in finance, in stocks, and on Wall Street, you can get lost in too much data, too many strategies, and just too much noise. Thank you for sticking with me. If you've been a repeat, listener of the podcast and the Substack posts, I have a hunch you're starting to see why breadth is so important to track every day, daily, and intraday. And I call it the intention of Wall Street. If you're a hedge fund manager, or if you're a manager at Vanguard and you manage $10 billion, you have to be invested. You can't have your money on the side in cash or at a mutual, money market fund. That money has to be working all the time. And this is what they're doing. They are pooling all of their money into 7 to 15 names. And that's how they're keeping this all afloat, while they're selling off everything underneath. But what happens now as they go after the Magnificent Seven? Microsoft is the only one above its 50-day moving average. What happens after you lose Microsoft? What happens if Apple next week falls below its 200-day moving average? What will keep the markets up? What is going to protect your 401k? You have to watch the markets and learn to do this yourself. Your financial advisors, if they're good, bless them, keep them close to you. But if they're run-of-the-mill, hey, you can't sell now. You're already down 50%, because if you sell now, you're going to miss the greatest rally days. Well, yeah, thanks. Why don't you tell me about this 50% downdraft in my account? No one should care more about this, your money, than you. So thank you again for sticking with this podcast and Substack. I will see you guys next week. Have a great, blessed weekend. Be safe out there. Have a happy Halloween with your kids if you're doing trick-or-treating. And I'll see you next week.